Hi, this is Randy Finney with the Right Side of the Chart, and today's Friday, February 1st, 2018. Wanted to do just a very quick video. I wanted to post this in a static format with a screenshot, post a chart, but it's easier to convey my thoughts in a video, very quick video, than rather than to type that all into notes. Might be a little confusing. So here it is. Natural gas has just gotten plummeted. I did a video this morning, showed the 60-minute chart, the breakdown of the rising wedge with the divergent high. That's right here. Here it was. So in the trading room was yesterday, I believe, when we were right up here at the divergent high. Posted that, showed a move down here. There was some support down there, and also the most importantly this trend line. Well, the trend line just got smashed through like it wasn't even there. There was a little reaction. So quite a move, and this is the biggest drop that we've had in about a year in natural gas, as far as measuring it in such a short period of time. I'm talking about just a couple of days. So that's the move. We're getting very overbought. There are some divergences setting up, and let me show you a couple other things that stand out to me in the video this morning and over the last few weeks. I've covered this chart. It's a pattern that I've noticed in recent years, where you see a year-end rally most likely has to do with the cold weather. And some winters they get colder earlier than others. Sometimes the really cold weather comes later in the winter, but right around the beginning of the year, as I showed in the video, here's these blue lines here, the horizontal dash blue lines show each the beginning of each year, the year marks, and so then you can see the rally here, 32, 31% rally followed by correction once things start to warm up or once supply overwhelms demand. 49% rally, 53% rally. Again, so the point is these corrections have always been faded. The rallies were faded and then some, meaning all of the rally. This one actually stopped a little shy of the previous rally. And then so far this year, right on cue, this is where we were long officially as a trade idea. UGAS down at the bottom, caught about half the move or so, but it continued up. And so we're right in range, so far about a 42% rally, which is right about in the midpoint of these, the rallies in the previous years. And so far a very sharp correction that tells us that this may be over. Now it may and it may not. You can see here this one, the 32% right towards the top, had a very sharp retracement. Looks, I'm not putting up Fibonacci retracement levels, but you can see that's close to a 50% retracement, and then another thrust up. This one, I don't see it there. There was a little consolidation, then a thrust. But here you go. There's another one. You had a pretty big move, very sharp retracement, maybe a third or so there, maybe hit the 38% fib retracement, give or take. Then one last thrust up. And let me show you this chart that we started out here. So this is UNG. This is one of several natural gas ETFs to track natural gas prices. And what I've noted here is I first, starting out just looking at this drop that we've had in the last few days. See, there's just 3 days, three red candles. There's gaps between because unlike futures, the ETF is only going to show you trading during regular trading, stock market trading hours, 9:30 to 4 o'clock, even though natural gas trades around the clock. So you'll see more gaps in there. But either way, so that just shows you a 3-day drop. And what I like to do is when I draw a trend line, which I did over that drop, um, that will show me, and then I want to look at other periods, it will show me not just the move, in other words, from top to bottom, since I'm using log scaling here, whether prices were up higher around 40 or all the way down here around 20. If you don't use log scaling, you'll have a distorted picture. And if you don't understand why, simply if you have let's say UNG's at $20 and it goes up 10%, that's a $2 gain. If it's at $40 and it goes up 10%, that's a $4 gain. Therefore, you use a log chart, log scaling, aka semi-log, and it puts everything, puts the candles in the right perspective. So in other words, it puts them in equal percentage moves. This is just, I feel very strong on using semi-log scaling when you're charting a security like natural gas. It has very large price swings. So with that being said, you can take that line, and all I did is clicked on it, made a duplicate, create parallel line. It gives you an exact replica of that trend line. So I did that, and I put it over here. And what I'm looking at is this was a rally, or the rally, let's say, the winter rally for natural gas back last year, or yeah, back in 20. It started in November, a little early, 2016, and you can see I also did a trend line here, and I moved it just to not block. You can see the trend line covers this whole rally right there from bottom to top, and I moved it over just so you could see the rally. I duplicated that trend line and I put it here. Again, moved it a little, shifted a little left just to see it. So you can see this rally was almost identical, went just a hair higher than the current rally so far, had a correction which coincidentally or not measures almost exactly to what this correction is, because remember, these are identical trend lines. I put this here from the top, and you can see, voila, we zoom in, you can see right there, right down to the button. So far, we are right now, or we maybe have a hair lower to go to be right about where this one ended. So that's actually the trend line I used. I'm sorry. So I measured this previous correction, put it here, and then you see if you zoom in real close, we have a little bit of downside. Now, things don't always play out exactly the same. But I'm sure if we put up things such as Fibonacci retracements, measure the rally, there's the move there, you see it coincidentally or not, boom, that's a 50% retracement. Could probably take that same fib line here and get something similar on this rally. There it is, measuring the high to the low. Boom, this one stopped cold at the 50% retracement. So call it coincidence, whatever you like. There's a reason Fibonacci retracements are so popular in technical analysis because they work very often. These key fib levels, 38.2, 50, 61.8, those are key Fibonacci retracement levels where a rally or a counter trend move will often terminate. So if things play out the way they did in the past, and again, they may or may not, but you can look for some evidence of a reversal here soon, then what you could expect would be this. One more thrust up to make a new high. What I've done here, I know there's a lot of lines, try to make sense of what I'm doing here. That's positive divergence. I'm sorry, negative divergence. Prices made a higher high. We had a 50% retracement followed by an equally sharp thrust up to make a new high. That high, as you guys know, I love to see this for major trend reversals, especially on the daily time frame. That put in negative divergence at that high. Uh, and again, I know I've said this a lot. I can't say it enough. Just because it happened then doesn't mean it has to happen now. Maybe it does happen, but we go all the way down and do a 61.8% retracement or some other level in between there, and then push up to a new high. Maybe that's it. Not all major tops have to end with negative divergence. We right now have a high level bearish PPO crossover, and that's already played out for a heck of a correction. But if things do play out as they did, and I just showed you a chart going back several years showing you how well that pattern of seasonality worked with the winter rallies and then the corrections usually starting right after the first of the year. So if that happens, here's what we're looking at. We could see a reversal here soon in natural gas, another rally up that takes out the previous highs. And if it's anything like this, it would be a very sharp rally. And that would terminate, that would give us something like this. You'd eventually see the MACD PPO roll up here. I like the PPO a little bit better than a MACD on the daily time frame here. And then it turns back down, thereby putting a lower low, I'm sorry, a lower high in the PPO, doing the same thing down here on the RSI, little move up if we rallied, fall shy of that previous high, and then give us that confirmed negative divergence right there, divergent high, and then that could mark the end of the run, at least for this season in natural gas. So there it is. It may or may not happen, but right now, like I said, it's pretty coincidental. This is about, and again, I went back several years. I didn't do the same checking the same scope of the runs. In fact, I gave them to you earlier on this previous chart. You can see some are higher than others, and they do range in their duration and how far they go percentage wise. So we do know it's safe to say that this is a heck of a correction so far. Now, the big question is the million-dollar question: is that it for this run in natural gas? Are we going a lot lower? Are we going to take out these lows? Sooner or later we'll bounce. We're getting pretty oversold, not so much on the daily time frame, but on the intraday chart, 60 minutes. So I think if we can get a reversal here soon, um, Let's look at another one. One of the favorite trading vehicles. If you don't trade futures, a lot of people like UGAS. It's leveraged. You better strap on and hold on to this one because natural gas by itself can easily, in a given day, move up or down 5%, if not more. Today alone, it's down 5% right now, and it's fallen at least that much every day for the last few days. So, if you look at a 60-minute chart, I think I shared this earlier. I should get rid of these all the grid on this chart, but you can see we have support here and there. Sorry, I was using a different chart versus my normal one. The grid lines were getting in the way. There's support there, 68.92. We had support here, 73.20. I posted that in the trading room. We sliced right through it, but there's support there. And there's our official target when we went long. We went long in the breakout back here, the falling wedge, and that target there was hit, I guess, at that point. And I believe that's where we went long, and somewhere along the line that was it. And it continued to go, but we've come full circle. So you look at it's just a wash, rinse, repeat scenario. You have a bullish falling wedge, a well-defined downtrend line, positive divergences. And again, I showed this on DGAS or UGAS. I showed it on natural gas futures, which I really chart closely because that's the purest play. Sometimes these natural gas ETNs, especially over time, don't track so well, but in the near term, they'll roughly mirror the price movements in natural gas. So there it is. You can see that we're coming up on support. We're deeply oversold, at least on the 60-minute time frame. So you can take a shot at a long with a stop somewhat below, hoping for that reversal. You can wait to see that reversal come. If you are trading these ETNs, remember there's a lot of the big moves can come overnight. So sometimes you wake up to a big gap up or down. That's the downside, if you will, or limitations to trading the ETNs or ETFs. And gaps can also bypass a well-placed stop order because stop loss orders, they're going to trigger if you use a stop limit. It's going to jump past your stop limit order. That won't even fill. If you use a stop loss order and it jumps past it, and the ETF opens up or down the next morning beyond your stop, that'll convert immediately to a market order at the opening price, and therefore you can get filled quite a bit away from the stop that you had placed. If you don't know what I'm talking about, look that up. You need to be aware of how stop loss orders work when trading. So there it is. So that would be the scenario, a reversal here, new high, maybe coming and back test that wedge. But again, just looking at the daily chart, that's where the case was made for a possible one more last thrust up, I think, before a major correction in natural gas. This has been Randy Finney with the right side of the chart. Hope you enjoyed it.